Unicorn TV is brought to you by Symetria. Symetria offers ongoing liquidity management to attract and retain the best talents. Give your team the benefit they desire and deserve and win the competition over talents with Symetria. Hi, I'm Lajarga Velazi.
And I'm Ziv Kenan.
And welcome to Unicorn TV, where we discuss what's new in the private markets and meet with leading tech companies. Unicorn TV is produced by Symetria, provider of secondary liquidity solutions in partnership with ILTV and FinTech TV. And now stay tuned because coming up on today's show, we'll hear from 3 leading VCs. What do investors look for when choosing to invest? And Israel's cybersecurity industry with record-breaking investments continuing its impressive growth trend. Draper Goren Holm is a blockchain venture studio fund focusing on incubating and accelerating the best early-stage startups from around the world. And so joining us now with more is Joseph Holm, founding partner at the firm. Joseph, thank you for joining us.
Hey, thanks for having me. It's nice to be on your show.
I think Draper Goren Holm is a unique blockchain fund. It's aiming at both crypto projects and more institutional projects such as Onera and Symetria, my company. Can you share more about your investment philosophy?
Yeah, you see, the stage that we invest in is sometimes, the idea stage, pre-seed, seed. We take founders and help them launch their projects and scale. And at that stage, there aren't the due diligence reports and any data to rely on. So we really invest in the teams. And we're blockchain agnostic, which means that we really invest in any project that makes sense in our view on any blockchain and in any vertical, such as Symetria and Onera being more on the regulated side of things. But we invest also in DeFi projects, we invest in infrastructure projects, and the best teams that come around and present their ideas to us.
And are there any, up-and-coming startups that we should be keeping an eye on, perhaps?
One of the most successful startups that we have invested in recent years is Lunar Crush. They are a social listening platform. They use AI and machine learning to analyze the sentiments on social media in regards to thousands of different cryptocurrencies, and as of late also more in the NFT and even stocks. They added stocks recently, and they are the title partner at this year's conference, and the team is amazing. And they are really one of the prime examples how we work, right? So when we met the team at Lunar Crush a couple of years ago, actually, it's more than a couple of years ago. I think it's like 4 years ago or so. They didn't have the money to pay for a booth on the expo floor. They didn't have money to go out there and meet investors and pitch their idea. So we took them and we put them on stage. We put them on the expo floor and really helped them scale. And now they're a booming company. They've been a huge success and they're growing at a tremendous rate. And that's really what makes it so much fun to do things the way we do it, because we really put our effort into helping the right teams get to the point where they can attract investors outside of Draper Goren Holm and scale their companies.
Thank you, Joseph. That was great. And we're looking forward to see you at LA Blockchain Summit.
Looking forward to seeing you soon.
The Israeli cybersecurity industry setting new records in nearly every field in 2021, with investments reaching $8.8 billion and continuing its growth trend in data gathered and processed by the Israel National Cyber Directorate. The details in the following report. The Israeli cybersecurity industry nearly tripled the amount it raised in 2021, according to data by the Israel National Cyber Directorate. In 2021, the cybersecurity industry raised some $8.8 billion in over 100 different deals and saw 11 new Israeli entrances into the prestigious Unicorn Club. That is, companies with a valuation of over $1 billion. And according to the data, investment in Israel is on the increase relative to the rest of the world. 2021 featured over 40 acquisition deals of Israeli companies worth $3.5 billion, and around 40% of the private global investment in cybersecurity funding rounds are in Israel. Overall, the Israeli Export Institute found that cyber exports totaled some $11 billion in 2021. Ro'i Yarom, Director for Economy and Growth at the Cyber Directorate, said 2021 was a record-shattering year in which the Israeli cyber industry showed it was not only an economic growth engine in Israel of the highest order, but also a pillar of the global cybersecurity innovation ecosystem. While 2021 was an outstanding year, it remains to be seen if the Israeli cybersecurity industry will continue to break records in 2022. And we're back with Amiti Ventures, one of the leading early-stage venture capital firms in Israel. It has successfully seeded and scaled some of Israel's major tech companies, including Vayar, Next Silicon, Innoviz, and Scicognito, and many more. Joining us now in the studio with more is Ben Rabinovitz, founder and managing partner of Amiti Ventures. Thank you for joining us.
Thanks for having me.
So my first question to you is, can you share perhaps about your investment strategy?
Sure. So basically our strategy is we're always looking for the best team for the mission. So regardless of the fact that we're focused on Israel, we're looking at it from a global perspective. If we match this team against any other team that was starting in this particular area, is this the best team? And usually, since we're investing at seed, when they're just starting, it's usually that it's the technology advantage, some ingenuity that they have. And after that, we look, is the market big? Is it being disrupted? Is the timing right? Are there a lot of customers, a lot of potential buyers of the companies, things like that. But the team is number one, and then we quickly then shift to the market and see if it's ready for disruption.
And we see a recent downturn in the markets. Some people say we're heading for a recession or stagflation. From your perspective, how does this affect the market or the risk appetite by VC firms like yourself?
So first of all, it's a good time to be an investor because in terms of first money coming in, valuations are lower. The time needed to actually do the due diligence and make the investment decision is longer now. So all that is advantageous. The other thing that we've seen is actually it's not so bad. Our companies, our more mature companies, are raising money. We've done a lot of follow-on rounds since April. So even in the last 30 days, we've had companies do really nice rounds, nice valuations, big up rounds for us. So I think the bottom line is if you're a category leader, if you're a true leader in your market and you've got some real advantage, sustainable advantage, you can raise money and you can still get good valuations. If you're a mediocre company or not one of the best, then in 2021, it was a great year because you could still raise money. This year, it's much tougher. So that's good.
Lidar mentioned before Vayar. What is the segment exactly that we know Vayar because we interviewed them earlier in the show. So we'd like to know what's the specific area which you invest in?
Right. So one of the things that I think mistakes that VCs make is that you actually have to kind of reinvent yourself every time you do a new fund. Because if we're really going to be leading edge, you have to always look at what's the new leading edge. So when Amiti started, which was at the end of 2010, we saw great opportunities in the semiconductor area. And then after that, we saw automotive start to get really interesting. And that's where you saw investments like Innoviz and Vayar, of course, plays there. Valens plays there. Autotalk, some of our other investments. And from there, we got interested. Also, then we saw, not just the cloud, but high-performance computing starting to take off. So we made investments there. And then when we got to our third fund, we saw that software is going from being monolithic to being broken up into small pieces, into microservices, and that it was going to require a bunch of new tools, a bunch of new cybersecurity requirements. So we invested there, as well as seeing that AI and machine learning were taking off. And now we're in our fourth fund, and we see quantum computing, synthetic bio, a lot of the revolution that's happening in biology over the last few years is really advantageous to take advantage of. So that's kind of how we've shifted over the years.
What are some of the companies that you've invested in that are working in these fields?
So we just recently did our first significant quantum computing investment. And in high-performance computing in the previous fund, we did Next Silicon. So these are areas that when we think of what's going to change the world the most by the time we get to 2030, definitely compute is going to play a very big role. We're going to be able to answer questions that we can't answer today. We're going to solve issues or start resolving issues in climate change and energy, sustainability based on what we're going to learn from these different, by leveraging the compute companies that we're investing in today. When we look at biology, we see that from all the changes that have happened over the last 10 years with CRISPR and Cas9 and basically all the things that helped us deal with COVID and medicines there will affect the entire supply chain. So not just medical, not just food and agriculture, but everything that comes out of the ground to be able to create in a lab will change supply chains dramatically across many industries. So those are the things that are exciting.
There's like huge difference, between countries that have those technology, AI, quantum computing, cybersecurity, is companies that haven't developed it yet, and that gap is only going to get wider. And
yep. Yeah. So when I look at quantum computing, for example, I view it as it's kind of like the nuclear race of the 40s, 50s, and 60s, right? There's going to be 5 or 6 countries that are going to lead in quantum computing, and Israel must be there.
So Israel must be a leader in this field. Ben Rabinovitz, thank you so much for taking the time to speak with us today.
Thank you, Ben.
And our next guest, the Elephant Brokerage, is an Israeli-owned global platform that operates as a secondary marketplace for private tech shares. Joining us now with more is Chaim Schiff, co-founder of the Elephant Brokerage. Thank you for joining us.
Thanks for having us.
So I wanted to talk to you about how the recent downturn in the public markets, which we've all heard about, has affected the secondary market for private companies.
So, like it affected the publicly traded companies, obviously it affected also the private companies, which is where the secondary market operates. And we saw in the beginning that there was just a pause. Investors were just sitting tight and not willing to discuss anything. It was a couple of quiet months, but then the players in the industry understood that there's a big shift here now from a market that was in a rally that everybody understood is going to come to an end, and now there are actually good opportunities to get into the cap table of great companies that you didn't have access to, definitely not at reasonable pricing and valuation levels, and all of a sudden there are opportunities to come in at reasonable valuations, large discounts into these companies, and you saw that they've become very active, and this is where we're at this point in time.
So, Lidar, I can disclose now that the Elephant has partnered with Symmetria to launch liquidity programs. And I wanted to ask you, Chaim, to use this stage to ask you, what is the shift that you see in the concept of companies' management of what is a secondary sale and the secondary, the life cycle of the company?
Okay, it's 2 questions, and I'll address them separately. First, companies understand now that they need to use the advantages of the secondary market to basically give solutions that previously they could handle through other channels. If they had oversubscription from investors in the primary round, they used secondary from employees, from early stage investors to provide access to more demand that came from the investors. At this point in time, investors are coming in the primary rounds. They want the money to go into the company and be used to working capital, not to give liquidity to employees that are going to make millions of dollars and enjoy the wealth. Now they want the company to use this for working capital. They understand also that the public market is closed. There aren't any IPOs that are going to happen anytime soon at the valuations that they're aiming for. So this solution that was available, during the last couple of years kind of disappeared. They need to find a different solution to enable workers, employees, early investors to get a liquidity channel, and that's through the secondary sales. And now at the same time, and this is addressing the second part of your question, they want to control the process because they don't want to see shares out there going around to whoever wants to buy and whatever. They want to control who sells and how much, what is the valuations, because they don't want this at the end of the day to affect the valuations when they want to go and raise capital.
Control is the name of the game, yeah? And how do you deal from the buy side,
Before that, I want to complete one more, and this is regarding the collaboration between Elephant and Symmetria. Another, aspect of this that we're seeing is management of these companies, while they understand that they need to provide the solution, they don't want to be overoccupied with this and use too much management time They're busy people as is dealing with this. So we at the Elephant see this as a very important aspect of these liquidity programs to ease the process in them as much as possible. And this is why we collaborate with Symmetria to bring in the technological solution for this. And basically, we handle the entire process for the company. You just set the parameters and you let us work.
And how do these liquidity programs promote sort of symmetry for all the stakeholders and such?
So we're trying to basically provide a win-win solution to everybody, because during the life cycle of the company, there's obviously different people involved in this with different interests. So if we're talking about the employees and the early investors, they're looking for liquidity solutions. They've been there for a while. They've created a great value for their shares, and they want liquidity, especially now that the public markets are no longer open because there's no IPOs. So they need some liquidity solution. The later stage investors, management of the company, they want to stay private. They have no interest in doing they can't do a secondary round. They're not going public. They don't want to go public at this time when the market is bad, when they're premature, they're not ready to be a public company. The secondary transactions buy them more time because it eases the pressure from the employees from early investors. It gives them, for HR retention, you have attracting talent, you want to bring them in. They got used to the idea that these shares are tradable. You can actually make money off of them. They need to show them how that happens. If it doesn't happen through a secondary round by the company, if it doesn't happen in an IPO, how does it happen? And this is where a secondary program led by the company, controlled by the company, I think is a win-win situation for everybody.
So as you said, control, the name of the game. Chaim, thank you so much for taking the time to speak with us today. And our next guest, Flori Ventures, is a seed stage fund that supports founders who use blockchain technology to tackle two major contemporary challenges: climate and access to the financial system. And joining us now in the studio is Tomer Bariach, partner at Flori Ventures. Thank you for joining us.
Thank you.
So, Tomer, tell us, what does it mean to be a blockchain, for impact fund?
So as you mentioned, we looked at the problems that are in the world today, and we categorized them to two problems: the climate crisis, which is not just the climate, it's the sustainability of the earth, the soil, etc., and the situation in the global south, as we see it, the participation of another 4 billion people in the existing economy. And how can we invest in founders who are trying to move the needle just a little bit using blockchain technologies?
Interesting.
Humanity is now dealing with climate changes, and we see it all over. I think this is the number one concern for humanity right now, putting aside the wars that are going on. What do you think that blockchain has to offer in terms of solution to that problem?
First, I would say I don't think it's a side to the wars. I think wars are many times caused by the climate crisis, and we've seen it in Syria and many other places. And you see companies like Microsoft, like Apple, like Google, all saying that they are committed to zero emissions, but they are incapable of actually not polluting the earth. What they are planning on doing is, let's say, polluting in 1,000 tons of carbon and then buying from another person who put back the carbon into the earth in order to say that they are carbon neutral. Now comes the question, what did they actually buy? When they say they offset it, where can you see if they did or they just promised you? Mm-hmm. Those kind of assets are today traded in the dark, retired in the dark. You don't know what was certified, to who, and where. Using blockchain technologies, you can follow all the supply chain. What was the data that, thanks to that data, we certify this person with those tons of carbon? Who bought it? For how much did they buy it? And this is the main market that we're looking at the moment.
This is so fascinating, and the issue of how do you verify, the impact? How do you verify? I think this is a main concern for everyone that is trading carbon offsets. And I wanted to ask you about a different topic. We both work together for a project named the Good Ola, basically promoting a universal basic income through the use of DeFi technology. And I'd like to ask you, from your perspective now, as a general manager of a VC invested in a blockchain technology in an impact project, how do you see how decentralized technology can assist this humanity with this challenge of universal basic income and equality, basically?
So I think I'll divide it into two ways. One, there's the infrastructure. Basic things that are very normal to us. We have a cousin in the US, we send him money, he sends us back money. But if you come from Nigeria and you move to Israel or to the US, sending back money to your family is not that trivial and it's very expensive. Stuff that with blockchain technology can cost you less than $1 to make a huge transaction. The second part of it, which is not just infrastructure, is the monetary system by itself. Blockchain technology allows us to reimagine how money is behaving. Instead of, we've seen it in the last crisis, the US has printed more money and gave it to whoever they believed is most important at the moment for the economy. If it was the banks, if it was the leading companies in the S&P 500. Imagining new economies allows you to say, like we did, let's say that the money that is printed goes to everybody to create a basic income. So everybody are equally important. Another way, credit, something that is very normal for me and you. We use credit all the time. We take loans, we take mortgages. More than 4 billion people around the world are unable to take any credit. Using blockchain technologies, we can reimagine how credit behaves, how credit is created. And those are the kind of stuff that I look at.
Can you tell us about the company that you invested in?
Yes. So I'll start from the credit side. There's some interesting stuff that we have. Basically, the first question that is asked when we're looking at credit is, what is the collateral? In case they default, what do we take back? A good example of it, we're working with companies in Mexico called Eticab. They're giving loans to farmers, to coffee farmers. And what they use over there is the collateral of the coffee that they bring on-chain and use it as an escrow to make sure that there is a collateral on-chain so those people can get loans. That's one example. Another one of those would be Massa Finance, who gives on-chain credit scores to companies using an AI technology. Many more other companies in that space, and this is in the credit side. On the blockchain, on the climate blockchain side, we have companies like MRV Collective or Hyphen, companies who take the data, let's say they measure the soil, how healthy is the soil, and they write it on chain. From now, any certificate that will be issued based on what happened on that round is backed by data that is transferable, that is transparent, and everybody can see it.
Nice.
So interesting. I mean, it's amazing the impact that we're seeing from what you've described from blockchain technologies. Tomer, thank you so much for taking the time to speak with us today. And that's it for today's show. I'm Lidal Govelazi.
And I'm Ziv Kenan.
Be well, and thank you so much for watching.